Good afternoon, everybody. Welcome to this week. And boy, what a week it has been. We got lots of Air Canada drama. We'll talk about that here in just a second. But holy banana bread, we had a great show on Thursday. So, as you know, we've started a new series called This Week Conversations. So we started off last month actually with Brandon Beavis. We had Brandon Beavis on, but oh boy, you guys really loved him. We had Adriano on Thursday, and it was a fantastic stream. And if you like income investing, oh boy, that was the stream for you. If you've missed it, the replay is available. So, and I'll tell you guys, this is the most viewed stream I have ever done. In fact, the stream on Thursday, if you take my top stream before that, this one still tripled it. So definitely the right guest. You guys, thank you for all dropping by. That was an awesome stream. Okay, now that that is done. Oh, by the way, speaking of streams, coming up on Thursday, if you are a channel member, it is our channel member monthly channel member stream that's coming up this Thursday. I'm going to drop a message a little bit later to you guys just to see if there's anything you guys want me to cover on that stream. Okay, without any further ado, let's jump into that first story. Oh boy, yeah. It's we'll leave it. Normally I'm supposed to be a little small in the corner to make room for the picture, but I don't know why it's doing that. Actually, I can fix it. There we go. It was an easy fix. I wasn't expecting it, but Air Canada, well, Air Canada has some turbulence ahead with a flight. Yeah, they've got a flight attendant problem. Now, with a flight attendant strike that is, I was gonna say on the radar, but it's here. We do have a strike, and you may have heard news as well. There's a lot of updates to this, but let's kind of step back. So, as of the end of Friday, Air Canada expected to cancel around 500 flights with a complete shutdown of all flights early Saturday if no deal is reached. So we already know, spoiler alert, there was not a deal. So this could potentially mean 130,000 travelers stranded every single day, including about 25,000 Canadians who are currently abroad who can't come home. So the Canadian Union of Public Employees, CUPE, I guess that's what they call themselves. They represent 10,000 flight attendants, and they were set to walk off the job, after midnight on Saturday, and they did. So they have officially gone on strike. Air Canada, not happy about it. They did call the strike regretful and deeply disturbing, warning that it is going to hit more than simply passengers. And they said it could ripple through a lot of industries, such as tourism, hotels, restaurants, during, of course, their peak time, which is the summer. We're in the peak. So, yeah, worst possible time for a strike. Now, in terms of travelers can get full refunds through Air Canada's website or app, but it can take up to 5 days to hit your account, so you don't get your money back right away. So if you're planning to use that money to rebook, you might have to wait. Also, when it comes to rebooking, seats may be scarce. We could be talking about a lot of full planes, especially if you're, relying on, let's say, WestJet, for example. Now, Air Canada did promise to try to give as much warning as possible for all of the cancellations, but right now it is a mess. Now, that was where it was at yesterday. Things have changed. Things have, as it happens. A lot of times I do one of these stories and I do it up on Friday and it's all ready for the weekend. And sure enough, a lot of stuff happens sometimes on the weekend. So yesterday, The government stepped in to break the deadlock between Air Canada and the stewardesses, saying that saying that it was not going to happen. They're saying that basically the disruption was unacceptable for this time of year. So they invoked their powers under the Canadian Labor Code to impose binding arbitration. So in other words, we're looking at a third party's going to come in and determine the terms of a new contract. Latest news. Now, that sounds like the strike's over. Well, not so fast. Not so fast. So the Air Canada flight attendants, they've decided no, we're not backing down. Despite the government issued return to work order, the union has stated that they are continuing the strike. And they are calling that the government's mandate to be unconstitutional, and they're demanding proper compensation for unpaid work. It's kind of what this whole thing is all about, because basically flight attendants get paid for when the plane is in the air. All the stuff they do before the plane flies and after the plane lands, they're not being paid for that. And they're like, yeah, this is not fair. We do a lot of work before the plane takes off, and after the plane lands, we want to be paid for it. So that's kind of where they are, they're stuck. So this is going to be interesting. Now, so far, and this has been kind of interesting, when you look at Air Canada's stock, it's kind of doing okay. Friday it rose. It actually went up on Friday. So we'll have to see. Now that all of this mess has happened on the weekend, will we get a drop in Air Canada stock on Monday? And those of you who are familiar with the channel, have been around for a while, you know some of us are waiting to make a swing trade. We're waiting for that price to come down. So I'm hoping to see if it drops on Monday. I'm going to say if, because so far it has completely defied everything I thought it should do. But if that price drops below $18.50 on Monday, I will be opening some swing trades. No ands, ifs, or buts about it. So we'll have to see. But in the meantime, what a mess. What a mess. That's all I can say about that. All right. That was our top story. Let's jump into the chat and let's see what's going on with you guys here. And we will start with Bismarcky with a happy Sunday to all. We got MC in the house saying good afternoon, everyone. And Rory is here with a happy Sunday. Jordan's in the house. Good afternoon, Candace. A long time no see. Hope you're well today. I'm doing fantastic, Jordan. I hope that you're doing well as well. Hopefully your wife is doing well, because I know that she had that health, that little health issue a little while back. So I'm hoping she's doing much better. Max says, hope all are having a great weekend. Bismarckies, congrats on Thursday's show. Yeah, that was a lot of fun. That was fun. I have to, I think me and Adriano are going to have to do another show somewheres down the line, because that one was overwhelmingly popular. One of the most common comments I had on that video is, my two favorite YouTubers on the same stream. This is great. So I'm like, okay. So yeah, we definitely have to look at doing another one. Rory says, Adriano has encouraged me to look at HYLD a bit closer. I might do a test buy and watch it for 6 months. Yeah. The big thing about HYLD. So when HYLD first came out, and guys, that's that Hamilton fund. It was investing in a lot of U.S. stocks. So like, like JEPQ and a few others. But Hamilton has come out with enough of their own content, so their own stocks, that they were able to reorganize HYLD. So now it only holds Hamilton funds. Because it only holds Hamilton ETFs, it's much better managed. Like, Hamilton is a very well-managed company. So I do like what I'm seeing. And I do see it as being and I think Adriano sort of hit the nail on the head the other day. It's kind of a different fund. Same ticker, different fund in many ways, but I do like it. Bismarcky says I support the flight attendants. Yeah. I I think, you know what? If they're not being paid, then, maybe all the customers, all the passengers should just seat themselves on the plane. The flight attendants can just show up just as the plane's getting ready to leave. But no, they do a lot of work. It's not fair for them not to be paid. So actually, I was unaware of that for the longest time. I found out, I think, last year. I found out about that, and I was just like, I was surprised, legitimately. I'm like, what? How can that be? That doesn't even seem like it should be legal. So I'm hoping whatever end solution we have between the flight attendants and Air Canada, whatever that is, I am hoping that they're going to get paid. I'm hoping. I know Air Canada did make some offer to pay them a little bit, but they shouldn't get paid a little bit. They should get paid exactly what they deserve, in my opinion. That's my humble opinion. Rory says they or Canada were ordered back to work, but the workers are defying the order. That's right. Yeah, the flight attendants have said no. We're not going back. This needs to be fixed. So yeah, I mean, I'm sure. Like, this is an ongoing story. It was just like quite literally, the flight attendants stated that they're not going back today, like earlier today. So I imagine by tomorrow we'll have even more on this unraveling drama of the Air Canada strike. Bismarcky, I'd hate to be on vacation with no way home. Yeah, and that's especially, let's just say, suppose you don't have a lot of resources and you're on vacation. What are you going to do if your flight is all of a sudden canceled and you really can't afford, to spend the next 2 weeks living in a hotel, down in wherever, Acapulco? I mean, sure, you probably sleep on the beach, I guess, but, yeah, I would like to see this. I'd like to see this resolved for sure. Lisa's in the house with a good afternoon, everyone. Rory says, yeah, unless you're in Switzerland. Yeah, maybe. Oh boy, good old Switzerland. A says HHLE fell to 815 and spiked back to 870 due to United Health run-up. Interesting. Yeah, I mean, it's going to be... I'm kind of like, I've been very shy about my healthcare exposure, especially any healthcare exposure that reaches down into the United States. Now, there is a little bit of healthcare exposure in like Canoe EIT, but it's not a lot. It's not a lot. Roku is in the house with a happy Sunday fun day. And A says, would have been more reasonable if government put condition of increasing their wages by a few dollars while they negotiate without striking so economy doesn't get affected. Air Canada needs to pay fairly. Yeah, no, they absolutely do. And that's the thing. It's like, come on. Like, there needs to be some kind of a compromise. If you want to go with binding arbitration, then yeah, maybe that's not a bad idea. That's not a bad idea. Like, hey, let's give them a little bit right now, and then we'll get this mediated. So we'll have to see how this all turns out. But, I do not blame the flight attendants for putting their foot down. I do not blame them at all. All right. Lisa says, yeah, sorry, totally ridiculous. The flight attendants are only getting paid while in flight. Who works for free? Well, other than when you start at YouTube. If you start at YouTube, yeah, you put in your first year for free. That's for sure. Rory says, a good thing Air Canada doesn't pay a div. We wouldn't get paid either. No, that's... You never know. Yeah, I kind of like that Air Canada doesn't play a dividend, because I like seeing them simply as that one stock that I can predictably predict what's going to go on with it, for the swing trades for sure. Claude says, hello, I hope you have seen London Gold's next dividends. great jump up for this time. I haven't seen, did they declare the next ones? But I will say, I've loved London's gold. Their last dividend, they gave up. They also had a bonus dividend last time. So I hope, and you know what, Claude, I'm just going to, yeah, it makes me sound like something's been declared that I have not yet seen. Let's just take a quick look. LUG, let's get in there. All right, come on. Seriously. Here we go. London Gold, gotta love it. All right, we're gonna go over to where their dividends are because we'll see what's going. Ooh, insider activities. I have not looked at that. That's interesting. All right, let's go first of all. Key data. All right, let's take a gander here. Look at this, September 10th. We are getting a bonus dividend again. Last time we got a special dividend, we're getting another one. So we're getting a 67.4 cents per share, and then we're getting a bonus of 41. Or maybe that's a bonus. One of them's a bonus, one of them's a regular, but in total, we're getting over $1 a share. Basically, about 67 and 40, almost $1.10 a share between the two of them. But yeah, that is not too shabby. That's not too shabby. But that's what's been going on with the strength in gold. Companies like London Gold, they have been giving some of it back to the shareholders. They've also been using it well to keep their debts down, things like that. So that is absolutely fantastic. 2 dividends coming up in September. Now, guys, if you want the 2 dividends, you got to be invested by the ex-dividend date, and that is September 10th. Well, that's the record date, so the ex-dividend date technically, I believe, is going to be on the 9th. So as long as you're in before September 9th, you're going to get them. You're going to get them double dividends. So gotta love it. Gotta love it. Ferris says, hello, what do you think about Trump-Putin meeting and the impact on the stock market tomorrow? Honestly, it was a giant nothing burger. Nothing was accomplished other than a few photo ops. And we got to hear Putin actually speak English. That's pretty much all I took away from that. So, Trump talks a big game about how he's the best at negotiating everything, but he really didn't accomplish much. And, I think it's kind of, I don't think anybody's going to be that surprised about it. So will it have a big impact on the market tomorrow? If it does, it'll be in the morning, but I don't see that as being that big on the market, to be honest. I think we're used to it. Every single attempt Trump has made to get any kind of a resolution in Ukraine has absolutely done nothing. It's been so many nothing burgers that if you've been dining at that restaurant, you might as well have another restaurant on the side because you're going to be very hungry. Oh boy. D. Dividus. On a positive side, the world didn't end. Consider the 2 most hated leaders were in the same place at the same time. Yeah, the world didn't end, but what can you say? Bismarck, he says, Trump is scared of Putin. Putin has something on Trump. Well, there's a lot of rumors, a lot of conspiracies out there too. And I'll tell you, I'll just pull back up here for a sec. I don't know if they're true or not. I'm kind of that type. Like I love conspiracy theories. Give me a good one. I want to hear it. I love hearing about them. But enjoying a conspiracy theory doesn't mean I subscribe to them. I'll listen to them. I'll listen to any conspiracy theory. You can tell me whatever, like 9/11 was an inside job, or we're hiding aliens at Area 51. All right, fine. Tell me them. I love them. I think they're fantastic. But if I want to subscribe, I kind of need to see some evidence. I don't know what's going on, but I keep an open mind about it, especially with the whole, Putin Trump thing. I know there are conspiracy theories out there that say Trump is an agent of Russia. I don't think that's the case, but some of the theories are interesting. That's for sure. Jersky says, "Good afternoon, everyone. Great job getting Adriano on your channel." Well, thank you. Absolutely. I was happy. I mean, I was glad. Here's the thing. I always look at it this way. You just gotta ask. That's the way I look at it. Like, I think when it comes to this channel, we're still in the early growing stage, really. But I think I put out enough content. Like, I put out I'm probably out of Canadian finance channels, I'm probably one of the more active ones. So I think in a way, a lot of people in that field, they probably have seen my content because it's everywhere. So, I think that gives me a little bit of, at least, I'm not coming in. It's not like if I reach out to somebody and say, "Hey, would you like to come over and do a show with me?" I don't think they're going to be in a situation they're like, "Who the heck are you?" I think people know that, and even with the whole Blossom thing too. So, yeah. So right now, I'm kind of like, who wants to follow Adriano? Because that was a great one. There's a few people I got my eye on for the next one. I don't know yet when the next one's going to be, but I'll probably start getting my feelers out sooner than later for sure. Marco says, let's see, Russia has all the leverage. That's just the truth. Trump's goal was to get the conversation started. Trump now has given himself an off-ramp. Yeah, I mean, that's the thing. And you got to look at it too. For Putin, this was kind of a bit of a victory. Russia gave nothing up. And he got all that respect. He got the red carpet. All of the fuss from Trump. So PR wise, huge. I think that's going to be huge for him back home, back in Russia. So what can I say? P.S. You're doing a great job. Well, thank you. Putin must have Epstein photos. All right. Bismarcky has just started a brand new conspiracy theory. Maybe. I don't know. I'll actually be kind of glad when the Epstein thing is finally put to rest, just because it's been dominating the news cycle so much. Sometimes, and this is one conspiracy theory that I do subscribe to, is that sometimes when you get something like the Epstein files that dominate the news coverage, is that I'm always concerned, what news are we missing? Because we're so busy talking about Epstein. What's going on behind the scenes? So I do tend to be a little bit more observant when we get something like this, kind of like, I don't know if you call it, what is this called, like wag the dog or something? I just like to pay attention to what else is going on in the world at the same time. All right. Let's see. Do you have a video on your investment goals and strategy? Yes and no. I think I'm very transparent about my goals. Like, overall, my goals right now are just growth. I love income investing. I'm not 100% income. I'm very much total return as my bottom line. And to me, it doesn't matter how I get that total return, whether it be through growth, whether it be through income, or in many cases, sometimes it's a lot of swing trading in that as well. But I think overall, because eventually, I will be moving fully into income, because once I retire, whenever that will be, at that point, I definitely want I want a 100% income portfolio, 100%, just pumping it out of my TFSA, tax-free, not affecting everything else. That's my end goal. That is my end goal. When am I going to retire? I don't know. It's going to be probably a long ways off. It could be 20 years. It could be 30 years. Who knows? I mean, depending, And here's the funny thing. This is kind of what retirement looks like. Like right now, I pump out 2 videos a week and bare minimum 2 live streams. Some weeks 3 live streams, some week 4 live streams. But retirement means that I'll probably be doing like 1 video a week and then maybe 1 live stream. That'll be the difference. So it's not going to stop. Unless, of course, I get to a point where, like, let's say my health goes completely downhill and I'm just not able to function. Well, yeah, of course, I'm probably not going to be doing a live stream from a hospital bed while somebody is feeding me. That's probably not going to happen. But, yeah, I'm going to keep this going for a long time. At least that's the goal. That's the goal at this stage. So, and and it really boils down to what income I have coming in from this. But, I'll still want to do that income. I still will convert fully to income by that time. Right now, it's more or less, I would say I'm kind of in a hybrid. I have a certain amount of income ETFs. Now, what I'm using that income for right now is I've been using it mostly for passive basically passive diversification checks on my portfolio. So you could call it passive rebalancing. So when the dividends come in, I'm not reinvesting. Like if I get dividends in from a particular ETF, I don't put them back into that ETF. I will use them on whatever stock is a little bit undervalued in my portfolio and, maybe pull things up a little bit that way. All right, Rory says, I take it's not the Epstein from Welcome Back, Connor. Yeah, I think it's a different one. Let's see. It is always helpful to know people's goals and strategy. It helps put the information in perspective. Thanks. Keep up the great work. Well, you're welcome. You're welcome. All right. I'm caught up. That means, we can actually jump to our next story. And this is an Ontario one. So Ontario is opening up the good old checkbook. And yeah, they're doing, this is a big one. They have a brand new $1 billion loan program that's rolling out to help businesses hit hard by, well, you guessed it, those U.S. tariffs on steel, aluminum, and automobiles. So Ontario, they're stepping in to help businesses caught in the crossfire of the Canada-U.S. trade war. Hello, thank you, Trump. Ontario's finance minister announced the Protect Ontario financing program. So this will be up to $1 billion in emergency loan support for Ontario-based companies in the steel, aluminum, and auto sectors. And this here, it is part of a larger, they've got a larger program. It's a $5 billion tariff-related support package that was announced in the provincial budget this year. And that itself is designed to give businesses impact by U.S. Section 232 tariffs, basically give them a little bit of help them get through this mess. It could easily be another 3.5 years of it, but this is how it works. So the loan amounts range anywhere from the low end $250,000 all the way up to about $40 million. So to qualify, companies simply must have already used up federal tariff support programs, and the funds can be used to manage hiring slowdowns, delay investments, or to offset shrinking profit margins. The goal, of course, is to help these businesses keep operating, growing, and ultimately thriving even in a hostile trade environment. So while Ontario can't control President Trump's determination to keep tariffs in place, the province is planning to stand behind the workers and the economy. They also said that they're going to be announcing another $4 billion, so that's a lot, in support measures in the months ahead. So that's going to be interesting, that's for sure. That's a good crew. I don't know what you're talking about, JJ. But hey, welcome to the stream. What's good? Oh, what's good, crew? Okay, never mind. I get it now. I just misread it. All right. Danielle says, hello, Candace. What do you think of CNR? Do you think it's still a good buy? I have it. Average is 146, but wonder if I should buy more to bring down that cost or just wait. I'm a big fan of CNR. CNR, of course, they're a backbone of the Canadian economy, not of the economy. Well, yeah, they are of the Canadian economy, but of the Canadian supply chain. So this is a company, and they're also going to be very, very crucial when it comes to critical mining, because critical mineral mining, because they have all the tracks up north where all of these mines are. So they're going to be huge. So yeah, right now, yeah, they're down a little bit, and they have been down for a while. And all I'm going to do is, while they're down, is I will add. I'm still pretty keen on them. I'm pretty keen on them for sure. Yes, ask him what's up, fam. I got it. I got it after I read it as a question. That's where that's where I got messed up. Rory says CNR CPKC a must-have in Canadian portfolio. Yeah, absolutely. Because I know a lot of people will say, "Oh, but CP is better than CNR." Well, not necessarily, but yes, at the same time. And the reason I say it that way is that I do think CP. Now, CP, with their acquisition of Kansas Southern last year, they're going to do fantastic in the short to midterm. So I think CP will be the bigger return when it comes to probably the next year to 2 years. But I think long term, I don't think you can beat CNR long term. So they're both fantastic. Like, we have two really, really good railroads, and I'm of that thing when somebody says, which one should I invest in? I think both is a very legitimate answer. All right. DDividend says CNR is back to where they were 5 years ago. Tells you a lot about Canadian goods economy over the last few years. Yeah, they are. They're certainly down. They're certainly down. I still like them. JJ. Yes, JJ has hit a milestone over on Blossom. Let me see here. It might still be up. Yeah, here it is. JJ right here. Massive thank you, crew. So yeah, I was just reading this. JJ has 750 followers over on Blossom. So congratulations. Definitely love it. I left a quick little congratulations over there for you, but yeah, you're doing good. Yeah, so far so good. So what JJ has been doing, guys, over on Blossom is, and actually let me just click on JJ. All right, here we go. So JJ's been putting these updates out. So basically JJ's journey, and there's an update every single day explaining different things. Like here from the other day, why I'm all in on covered calls, first time portfolio update and key milestones. So yeah, it's pretty fascinating. So I would definitely, if you're over on Blossom, throw him a follow. And check it out. It is pretty good. I will say some of them are long. I know the other day I pulled one up and I said to Jill, "Oh, it's another JJ novel." It's not quite that bad. I'm enjoying them. I think it's pretty good. All right. Let's see. Blossom doesn't work on Firefox desktop. I only get the bank link. No manual adding. Yikes. Yeah. Now I'm using it on Safari. It works fine on Safari, but yeah. I mean, maybe, and that's the thing. Next time I'm talking to Brandon, I'll mention to him that they need to test it on a few other browsers. Jersky says, I've been buying CNR on these discounts. I also own CPKC. Awesome. Is Blossom free or is there a fee? All right. Well, first of all, let me give you the link. I'll give you a link here. All right. So this is my link over here to Blossom. So yeah, Blossom is free. You can go in, you can download it. You can set it up. You can, if you want, you can hook your portfolio to it. You don't have to. Now, here's the thing too. Right now, a lot of if you got a big bank as your broker, they're not available yet. So I think there's pretty limited. I believe Questrade and Wealthsimple, of course. You can do it manually. So, or sorry, you can hook those up automatically, or you can just manually do it. That's how I do it. I just manually do it because I'm hosting right now the 0 to 100K challenge over here on Blossom. So, for example, if we come over here and click on portfolio, this here is the 0 to 100K challenge right here. So this is, I just manually enter all of these in because we don't have API access for National Bank yet. So that's what I've been doing. So that's what, eventually down the road, we'll have access to all of that, and, you won't have to. And I've heard this before. Some people are like, I don't want to give them access to my broker. Now, what does happen is when you do give them access, so for example, if you hook it up to Wealthsimple, all Blossom gets is a read-only. Basically, they get a copy of the API in a read-only mode, so they can see what you have, but they can't actually do anything. They can't make any changes. They can't do, you're not giving them any authority to do anything at all. It's just all read-only. So that's just how they get the data. But at the same time, if you're still worried about it, just you can always manually set it up. It's pretty darn simple. But fee-wise, yeah, it is free. Now, there is a pro version. Pro version does give you more features, but you don't need the pro version. Even on the free version, there's tons there that you can do for sure. And if you jump over there, be sure to follow me. I'll follow you right back because I will show you right here. These are the people I follow. I always go into my notification, and these are the ones I will look at, and I will skim through here. And if I recognize a name, so for example, I was here earlier today and I saw JJ. So I will then I'll go and answer those. So I like to do it that way. But yeah, so, David. I thought I followed David. No, I have not followed David. All right. So I always follow back. Anyone who follows me, I go in and I follow them back because that's how I get my, that's the news I look at. I don't look at the main feed. I want to look at the people who are following me and see what they're saying. Bismarck, he says, what's JJ's handle on Blossom? We'll just go back in here. Here we go. Just JJ Pandy. So JJ Pandie. Let me see here. Yeah, here we go. Does he actually give me, well, I was going to say, I was going to see if I could see a place I could actually, yeah, I can copy it. Let's do it this way. Haha, this should work. There we go. I think this will work. So now you should be able to see. Yeah, there it is. Perfect. Oh, JJ already did that. What can I say? A says, what do you think of CNQ? It has been read for several days. So Canadian Natural Resources, they're massive. They're a big company. They have a huge moat. Yes, energy's down, so they're down. But when oil turns around, that's a company that will absolutely explode. So, if you want to make a lot of profit, they're not a bad company to put in your portfolio and to grab while they're down because eventually oil will explode. It always does. It's very much cyclical. So yeah, I absolutely love CNQ. Yeah, you're welcome. Is it available on PC or only on phone? On both. It initially started as a mobile app, so for phones and tablets, but they've now made the PC, I don't want to say PC version, but the desktop version. So now you can get it on desktop, and I'm excited about that. Because I can show it on the air. Before I couldn't. Now I can, and they're continuing to add more functionality. There's still a little more functionality on the mobile version, but the desktop version's getting better all the time. JJ says, Blossom is free to use, but I'm a paid pro annual user because I'm trying to eventually get that ambassador badge as soon as I launch my channel. Well, it may not happen that fast, but And now I'm beginning to understand a little something about JJ. JJ's networking pretty good. So JJ is my mod. And I found out that JJ is also Adriano's mod. So JJ's modding the world. It's I thought it's funny, but it's good that way. I mean, the more connections you make, once you've got a channel up and running, then yeah, absolutely. I'll mention you. I'll throw your name over to Brandon at that point. And then he can take a look and see. Of course, he has, Brandon Beavis pretty much has the final say for memberships. At least he used to. So I think it's still that way. Now, they don't add a lot of people. Like, quite literally, some months they might only add maybe 2. Lately, they've been adding U.S. people, U.S. folks. And Blossom now. Oh, by the way, guys, any of you who are not in North America, good news. Blossom is now pretty much available in about 30, I think roughly 30 countries. So, you have that opportunity as well. So if you want to check it out and you're in, I don't know, Sweden or Netherlands or Germany, hey, for sure, give it a whirl. Anna Maria says, hi, I love your channel. Is there a harvest ETF on gold? That's a good question. I would have to, you know what? I don't know off the top of my head, but has that ever stopped me before? All we need to do is, let's pull Google up here. We're just going to head right over here to Harvest. Harvest ETFs. All right. We'll take a gander. I feel like there should be. But let's take a look here. Good old Harvest. Do not need Harvest Insights. Actually, I think I'm already signed up. I get a whole bunch of these things sent to me right away. All right, let's just take a look here. I'm going to do a search. I'm just going to type in gold. See what we get. All right, let's do this. HHIS, that's not, here we are. Hungry for gold exposure. So yeah, there's the Harvest Global Gold Giants Index ETF. So HGGG. All right. I've not looked at HGGG. All right, you know what, guys? Let's take a look. HGGG. All right, Harvest Global Gold Giants ETF. We're going to pull this up. All right. I'm kind of curious. I want to take a look at the last year. This has got to be looking good. Oh, yeah, look at this. So it's gone from 34 to 57. Fantastic. Now, I don't know anything about this one. I've never looked at it before. Does it have dividends? No. So this is a 100% growth play. And let's see here. Can I get, will it let me click on it? No, it won't. Seriously, guys. Let me click on it. All right, we'll back out. We're going to back out of here. Going to back out. And now let's just do it this way. HGGG, ETF, bang. All right, Harvest Healthcare. Yeah, okay, here we are. Gold producer covered. Oh, that is not them. All right, Harvest Gold Giants. Here we are, right here. Here we are. This is the one I'm looking for. Sometimes you get the sponsored ones in front of you that are trying to sort of get around you. All right, but here, what I want to do is I want to take a look at their portfolio. So let's see. So they're holding 20 companies, mostly Canada, a little bit of U.S., Australia, United Kingdoms, and here we are. Let's take a look here. So you got Newmont, Artemis, Pan American Silver, Barrick Mining, Angigo Mines, Kinross. I'm not seeing that. Oh, wait a minute. That's only 1 to 10. I was going to say, where's London Gold? Come on, guys. How can you not have London Gold in here? Oh, there they are. London Gold. They got London Gold in there as well. 5% of the fund is London Gold. But anyway, yeah. So that's how easy it is to find some of this stuff. But yeah, it is growth. 100% growth, though. All right. JJ. Whoops, here we go. JJ says, plus it helps to build authenticity having that pro badge. Okay. Yeah, absolutely. Fair enough. Blossom is best on the phone app. It is at the moment, yes, but it is getting it's it's growing by leaps and bounds. The desktop app getting better and better. So, and I will keep putting pressure on that side because I like to use it on, like I said, I like to use it on the stream. Does anybody know when Questrade enable fractional shares on Canadian-based ETFs and also banking features, paying bills, etc.? No idea. But if anybody does know, please let Jay know. All right. Gene says, do you have idea about what happened to BDT over 70% down last week? Is it time to buy the dip? Thank you. I'm still hugely bullish on bird construction. So yeah, I would say it's time to buy the dip for sure. Bird construction, one of the things I really like about them is they are very good at grabbing government contracts. When it comes to infrastructure contracts, they're really, really good, and they're going to pick up a lot of contracts as we move into the build section of that One Canada economy bill. So yeah, I do like them. While they're down, this is going to be the time to grab them for sure. I have no, I'm not worried in any way, shape, or form. Not with bird construction. All right, JJ says, I know some posts are super long, but it's for that mindset. Some people enjoy it. It's hard to make short posts when you're trying to do a deep dive on certain topics. Yeah, no, I'm not. Yeah, don't take it the wrong way, JJ. I'm not complaining that they're super long. I'm just letting people know because some people, they might be like, I just want a couple quick little things. But no, I mean, they're in depth. They're actually pretty good. I like what he's doing. Let's see. When a split occurs on a stock, does we get the split on ETF Harvest also? Yeah, technically yes, but also no. And what I mean by that is that, let's say, for example, we have a split coming up right now on Loblaws. So let's say you are holding XST, which is the iShares capped consumer staples index. If you are holding that, then yeah, their shares are going to double. So let's say that they were holding 1,000 shares. Well, that 1,000 is going to go to 4,000. But they've all been quartered down, right? So when you look at it from the perspective, you still have a 5% exposure to Loblaws before and after the split. So you won't really notice it. Yes, there's more shares, and yes, you will have access to more shares per se through your ETF, but it's still 5%. It really isn't going to change anything. Where you sometimes, and this is sometimes, I have seen a couple of scenarios with single stock companies where the ETF may do a split. I think one of the NVIDIA ones did that. How long ago was it? That was, I think, last year. But even then, it was kind of independent of NVIDIA's split. It's just they can do it as well. In which case, so let's say, for example, XST, let's say they decided, we're going to do a split because we want our ETF to be a little more affordable. In that case, once again, you'd still have the same percentage. Nothing technically changes other than you would have two shares. So instead of one share at $50, you'd have two shares at $25 each. Both would still have the same percentage of Loblaws, for example, in them. All right, A says, which is better? Which is better run, Harvest or Hamilton? Any difference when selecting between the two groups of ETF? Fees, growth? All right. Harvest, I think, has a longer history. So Harvest is very well seasoned. Hamilton, I like them both. So when it comes to the big Canadian ETFs companies, so Harvest, Hamilton, Global X, Vanguard, Evolve, I think they're all well managed. Even like BMO, I like BMO a lot too, but they are well managed. So I wouldn't say that one is better than the other. Obviously, when it comes to fees, you're going to have to sort of look at each individual one. And this is the best way to look at it is I always like to look at total return. How much am I putting in? How much am I getting back? And that becomes to me the big important factor, because if I'm putting in, let's say I'm putting in 100 and I'm getting back 120. Well, if I pay less fees on another fund where I put in 100 but I'm only getting back 118, that doesn't make sense to me, because the total return, like I don't care about fees. Not the only time I would care about fees is if I had two funds that were both returning the same amount, and one of them had a higher fee than the other. Then yeah, then I might go with the lower fee one then. But normally, it really comes down to that total return. That's going to be my deciding factor. Because I'll look at it this way, and me and Adriano did talk about this. You take Canoe. Back in the days, Canoe was one of the most popular. So Canoe EIT was one of the most popular income funds when it comes to dividends, because at that point they used to be down. Well, they used to be down around $12 or so, and that dividend yield was pretty close. It wasn't fully at 10%, but it was like 9% or so, and you were getting that reliable 10 cents a share, and people loved it. But I actually witnessed people who all of a sudden found out that they're actually behind the scenes. Canoe is charging about a 1.48, something like that. That's the fees. That's the fees for running the fund. So then people were like, "Oh, that's a high fee. Their fees are way too high. I'm not gonna invest in Canoe." But before they knew what the fees were, they were absolutely tickled pink with the returns they were getting. So what's changed other than the fund, the fees were still there when they were tickled pink. It's just all of a sudden they're focusing on the fees. They're not focusing on that total return. So I will say to you, if you look at a fund, an ETF, and you like the returns you're getting, you like the numbers, you like the math, then who cares what the fee is? The fee is the cost of doing business. It doesn't matter. And keep in mind, and just so everybody is clear, all of those fees are already taken out. It's not that you're going to be hit. It's not, if something has like a 1% fee on it, it doesn't mean that, they're going to come back to you a little bit later and say, yeah, I got to take 1% of that away from you. No, it's already been done. That's already in before. When you look at that yield, it's already been calculated before they've even given you that yield. That yield's taken everything into account. So you don't have to worry about that. It's just, I always say, look at the total return. If you're happy, especially when you get into, like when you move into retirement and you're at that point where you're building your income portfolio, oh boy, yeah, there's going to be fees there. But just look at that return. Look at what you're getting back and make that your decision. If it's providing you, if your portfolio is providing you with a lot of income that's meeting your needs, why nickel and dime over the fees? That's my philosophy. Now, there are some people out there who are maximists, and they'll be like, think of how much you're losing when you compound that fee over years. Well, yeah, but if I go with a lower fee one that has a smaller total return, I'm losing more compounded total return over those same years than what I'm losing on the fees total, compounded. So nothing to be too super worried about. Rory says no Mary today. I haven't seen Mary yet. That means, oh boy, guys, thank you, Rory. It's time to hit the like button if you haven't done it yet. I'm going to have some iced coffee here while you guys do that. Oh, that's so good. I'm going to miss iced coffee when the colder weather comes back, that's for sure. Omra in the house with a good day. All right, let's see. Every time I hear about oil gas, which I own, the theme to Dallas plays in my head. Nice. Good old Dallas. They did, not that long ago. What was it? Maybe, oh gosh, probably 10 years ago, they did a remake of Dallas. It actually wasn't that bad, but I remember that. Roku says maybe JJ should be negotiating Canada's tariffs. That'd be fun. I'm okay with that. Let's see. Funnily enough, Roku, I'll probably starting sprinkling in my politics on my channel. Nothing's off the table to talk about, even if controversial. Fair enough. Fair enough. I mean, when it comes to politics, I do my best to navigate the middle. Where I like, and just because JJ brought this up, so where I sit politically, I'm a little C conservative, little C. I'm close to the center, off a little bit to the right, but yeah, it's kind of like, I like it because I can understand. I think in this position, I can understand the left, I can understand their reasoning, I can understand the right, I can understand their reasoning. So I think it's a really good place to sort of navigate things from there, and just to be able to, when the right and the left are going at it, well, I can kind of get a grasp on both sides, and usually I can often see where the truth is, which is usually both sides are wrong. Let's face it. On most issues, when the right and the left are going at it, both sides are pretty much wrong. But the truth is usually in between there. And that's one of those things where it's fun to, wow, this feels like it's turning into a ground news commercial, but no worries, it's not. But I'm just saying it's starting to feel that way. Let's see, what are the negatives that annoy you with Questrade? Let's see. I've tried to sign up, and I've actually gotten to the point where my initial application to sign up with Questrade, it actually expired. And I'm kind of at this point right now where even though I have an account, but I don't have any actual accounts within the account, I'm just like, I try to start it again. They're like, we want to do the whole process over again, ask you all the questions, ID and everything. And I'm just like, nah, I don't feel like it. You guys have kind of lost me. So I've never had a chance to get inside of Questrade because they botched my application process so badly that I've kind of lost confidence. Lisa says, have you ever done a deep dive on National Bank? I don't think so. I don't think I have. I know I've included them in lists, but I've never done a deep dive on them. They may be the only bank, I think. I'm sure, no, there has to be at least one other. There has to be at least one other of the top 6 that I have not done one on. Claude says, I wonder if Celestica will keep going down this week or if it will climb back up. Yeah, I know. That's a good question. Right now, looking ahead at this week, it's kind of I think it's kind of an interesting thing. So when we're looking at what could be, see, in the U.S., not a lot going on. It's a very slow week, so we don't have a lot of things that could be stimulating the market, other than the normal stuff that happens. But up here in Canada, we do have a bit of information coming out this week. Tuesday, we got CPI report coming out. Thursday, we got the PPI coming out, so the Producers Price Index. And then on Friday, we got our retail sales report dropping. So we do have some reports dropping. But I don't see it as being... I see some calmness. I think this is going to be a calm week. So I'm kind of looking forward. To it. But we'll see. But right now I'm thinking like Celestica, yeah. I think they should do some rebounding. Celestica, I'm also looking to see a Metro move back up a little bit because, as you know, I got a swing trade going on with Metro, so I'd like to see them recover some of that value that they lost when their earnings report came out last week. Dividus says, I totally agree with you on fees only relevant for index funds with the same underlying index. Yeah, like one area, I guess, that would probably be a good place to look at fees would be if you're looking at spot Bitcoin ETFs. Some of them have bigger fees, but here's the thing. Once again, and this is where I'm going to say this. Some people will say, okay, here's 3 spot Bitcoin ETFs. Here are their fees. And they'll just say, I'm going with the one with the lowest fees. All right, fine. But why not take the 3 and actually chart and figure out what their total return has been? And if one with a higher fee has a higher total return, what does that indicate to you? Well, it indicates that they may be managing it better. And that might be why it might cost them a bit more, because they have better management. And if it's returning you that higher total return, then you know what? Then at that point, yeah, it's probably worth it. Because, there are, if you've got some really good management team that's really good at hitting them covered calls, they might cost more. They might cost more than perhaps a smaller ETF company who doesn't have the best talent. So, you always want to be checking out, how are they doing? What is that total return? Because that's going to really say a lot. Let's see. People talk about fees way too much. I think it's brainwashing from the 4% rule camp. Yeah, maybe. So the 4% rule, I'm not a fan of that. I'm not a fan of that at all. Danielle says, what do you think would be a good ratio individual shares ETF covered call once you are early retiring like me? I am 52 and planning to retire at 55. Okay. Freedom 55. I like it. I always look at it this way. You obviously have a couple of situations. First of all, if you're planning to retire at 55, you either have a very good portfolio or you've got some pensions going on in the background which are going to support you. I always look at it this way. If you need a specific amount of income. So let's say, for example, you need $20,000 of income and all of your other supports that you have. Between that and $20,000 of income coming out of your TFSA, you're fine. Well, I would personally, what I would do, especially in an early retirement situation like 55, I would put enough into, I would shift enough into income ETFs to hit my 20,000. Then the rest of them, I probably would continue growing. Because I look at it this way, as I get older and older, I would like to have more and more dividends. So, if you don't need the rest as income, it makes sense in that case to grow, to go into a total return scenario at that situation. Now you could, and I will put this out there, there are some people who will argue, and I'll see this argument a lot. Well, why not just stay total return? Don't even go into income. Just total return all the way. And, whatever money you need, you just sell a few stocks. That's fine. That can work. In a bull market, that works really well. It's fantastic. But let's say you're running that scenario and tomorrow we have a housing market crash. Big one, like 2008. Oh boy. Now you need to start selling each month to make ends meet, to get your funds, but now you're being forced to take a big loss. And that's where if you have income, so with a lot of the income ETFs, at least you've still got that income coming and you're not going to be forced. So you're able to wait out bear markets and black swan events, things like that. That's one of the advantages. And that's one of the reasons that when somebody is at that point where they need to generate income to live off of, that's one of the reasons why cover call ETFs or just high income funds make a lot of sense. Now, if you have a huge investment portfolio, you can, of course, you can go with lower risk ETFs, or you could go with really high paying dividend stocks, things like Enbridge, for example. But the danger is you look at something like Enbridge and yeah, that dividend is nice, but look at somebody like BCE as an example. They had to cut their dividend pretty much in half. So You're not going to find that type of a cut normally in your cover call ETFs. They're a lot more stable that way. So, but I guess we really went off on a tangent here. Um, Basically, Danielle, my answer is I can't give you exact numbers, but my answer is go with as much as you need to meet your needs when it comes to income. That's the way I would look at it. That's how I would approach it. All right. Elisa says, even with the drop, Metro has been doing quite well for me. Yeah. Oh yeah. No, Metro's fantastic. And I'm in the green already. My swing trade is already in the green, coming back up. I just have a certain target. So I'm waiting for, well, here, let me pull it up. Let me pull it up here. Right over here. Here we are. So yeah, here is the drop. So my goal is I'm planning to ride it up to about 103, somewhere's in that vicinity. 100, anywhere from 100 and, yeah, about 103. I think 103 is fair. So I got in down in about here. So right now I'm just in the green a little bit. So I get in down about here and I'm going to ride this. I'll ride it up. I mean, I'm prepared to wait a week, 2 weeks, 3 weeks. It doesn't matter to me. I'll wait as long as I have to, but I'm pretty confident we'll at least get back up to about here, 103 to 104. I think that'll happen relatively fast, like probably before the end of August. So I'm riding it up. I'm just riding it up. All right. Michael says, hello, Candace. I sold my position in InterRent at $13.30 as I doubt it will go higher given the buyout. Okay. Interesting. Yeah. Candace said, the leaves changing color in Ontario yet? They are here. I haven't seen any yet. Now, I was out on, was it Friday? I was out Friday. I did not see even a single sign. Everything still looked pretty green. But I'll tell you, with the lack of water, I kind of worry that we might get more of a brown, a lot more browns this year, but we'll have to see. We could definitely use 2 solid days of rain. I will tell you one thing. I went to the post office the other day, and all the lawns on my street, they're all brown, all of them, except for my neighbor. My neighbor, though, they go out and they're constantly watering their lawn, but everybody else, our lawns are all brown. OM says, what do you think about Franco-Nevada? I've been buying plenty this year. So Franco-Nevada, yeah, they're another gold mining company. I like them. I mean, right now, I think it's hard to go wrong in gold, especially with the bigger companies. So Franco-Nevada, London Gold, America, Americo. There's a whole bunch of different ones, but I think we're also good. Constellation is also falling. Yeah, I mean, and that happens. I mean, Constellation Software right now, they're Canada's biggest tech company. Although, we're talking price-wise. Technically, Shopify's bigger, but market cap-wise. All right. Let's see here. All right. Also, so yeah, D-Dividus also retired at 52. Moved all of my growth in individual dividend stocks to cover call ETFs for most part. It has worked out amazingly well so far. I reinvest what I don't spend. Okay, fair enough. And Patricia is in the house with a hi. Hello there, Patricia. All right, guys, I finally caught up. You know what that means? It means we can actually move on to the next story. This might be the one that people are like going, huh? What is this underwear empire all about? So let's talk about it. So there is a potential underwear empire merger on the verge. So Montreal-based Gildan Activewear, they are apps. They're like in the final stages of snapping up U.S. rival Hanes brands in a deal that could top about $5 billion. So, oh boy. So yeah, Canadian t-shirt and apparel giant Gildan Activewear, they're in advanced talks. It looks like it may have already happened this weekend. But they are going to acquire Hanes brands. And I get this. At first I get excited. I'm like, oh, Fruit of the Loom. But no, that's a different company. Because I was picturing the little picture there with the grape guy. But no, it's Hanes. It's Hanes. Now, sources say the deal could value Hanes brands at about $5 billion. Now, they do come with some hefty debt, so that is one concern as well, that Gildan will have to take on that debt. Hanes brands, they have been struggling, so weak sales, inventory reductions from retail partners, and higher input costs, all, of course, thanks to U.S. tariff policies. So as a result, their shares have been down 40% since January. That's before the takeoff rumors surfaced. Of course, now that the news has broke, Hanes brand stock surged 28%, going up to $618, while Gildan's fell a little bit by 3.6%, probably because they're about to take on a company with a fair amount of debt. So the company we're currently behind Hanes, they're called Bonds, Maidenform, and Bally and Playtex. So those are the different companies that Hanes has. They've already been selling assets to reduce some of that debt, including they picked up a $1.2 billion last year for selling off their Champion brand. Gildan has been riding high. They had record Q2 sales, which is fantastic. They're, of course, known for their blank t-shirts, fleece socks, and underwear, and they're currently valued around $10 billion. And they have generally been focusing on growing their existing brands, but this will be their biggest acquisition since, they also picked up American Apparel back in 2016. So this could be interesting. So the CEO, Glenn Chanady, recently said that the company prefers to gain share rather than buy share. He's also noted that they'd consider the right opportunity, and it looks like Hanes tends to be that perfect fit. So both companies have a history with activist investors, and both have felt the sting of the U.S. retail slowdown, but Gildan's domestic cotton sourcing has helped it weather Trump's tariff policies better than Hanes. And that could be a key factor if the deal, of course, goes through. But it will make them, pretty much the biggest underwear company in North America. What can I say? It was an odd story. I when I came across it, I'm like, do I do an underwear story or do I not do an underwear story? But I couldn't keep it under wraps. What can I say? All right. MC says you pay taxes on your swing trade profits. Yes. It's basically 100% taxes because it's the way I'm doing it. It is considered business income, so it is 100% taxable. Yes. A says Lightspeed versus Shopify. Why is Shopify more successful? Shopify they have really reached out well. Their online presence has absolutely propelled them into the limelight. They've made the right deals. So yeah, they have, I guess you could say they have outshopped Lightspeed in that sense. Patricia says, I didn't know Gildan was from Montreal. Okay, well, there we go. Danielle, I've been investing in mutual funds with my bank since I was 20 years old, learned 2 years ago about dividend stocks, and last year about covered call ETFs. I hope by now you've moved a lot more out of those mutual funds, because you will find one of the problems I find with mutual funds, they tend to come with a lot higher fees. And I know I know I said don't worry about fees, but in the case of mutual funds, sometimes they can be a little bit problematic with the amount. And to the point that they will hinder some of those total returns. I know I've worked with a few people, and one of the first things we've done is moved out of mutual funds completely. Gotten out of the mutual funds, getting into those covered call ETFs or regular growth ETFs, whatever the need be. And see, now I'm building my own income portfolio, and I'm still learning. So yeah, it sounds to me like you've left the mutual funds behind. Rory says Adriano from Passive Income Investing and a few others are bullish on leveraged cover call ETFs. Yes, and Adriano talked a lot about it. Actually, yeah, quite a bit on the live stream on Thursday. So yeah, and I do like them. I do like them. I just tend to be a bit more strategic. Now Adriano is more of a just keep buying and buying and buying and set things, as they are. Whereas I tend to be like, okay, it's falling. Maybe I'm going to move out of this leveraged fund, but I see the points. I've seen the points that he made, and I don't disagree with them. It's just, I tend to do it a little bit differently, but at the same time, it still works. It still works. That's kind of the way I look at it. Let's see. Danielle says, I always worry that this is too good to be true, but I am doing very well with my choices. Yeah, I think that's kind of the whole thing. There's a little bit of a stigma, I think, around investing. Like a lot of people, one of those sayings are, don't invest more than you're willing to lose. So that kind of a saying like that implies that, you could just lose everything in the market. Just everything. Well, no, not necessarily. If you're doing it right, if you're putting in the research, if you're looking at the fundamentals, you're never going to really run into a situation where all of a sudden all of your money just goes to zero. So, it's sayings like that. And I think it kind of gets into the overall feeling. So a lot of new people come in, and when things start working and investing starts doing what it should be doing for them, a lot of times it's kind of like, all right, when's the shoe going to drop? It can't be this easy. It can't be this easy. But it can be. It can be. If you're doing the homework, you're not going to run into a situation. Can you run into a situation where a stock goes to zero? Yeah, you can. But usually it's not a stock with good fundamentals. As you guys know, I'm not a fan of penny stocks. Those are the ones where, yeah, that's a stock that could go to zero. But then again, if you find a penny stock that you like and it's got good fundamentals, it's probably not going to zero. So you kind of have to look at it this way. And the other problem too is that people who get in, so if you're new to investing and you have not yet been through a bear market, well, that's that thing where when the bear market does come, a lot of time new investors who have no idea what it is, they're watching the market fall daily. They're watching all of those nice green, lovely numbers in their portfolio turn to red. And a lot of them get to the point where they're like, oh my God, I'm losing all that hard work. It's gone. My money's disappearing. I can't lose anymore. I can't afford this. And what do? Well, they take those unrealized losses and they start selling stuff. And before you know it, they're sitting on a smaller nest egg than they began. And they're like, at that point, they're like, I can't believe the market just beat the crap out of me. The market beat me up. I don't think I'm going to do this anymore. And they leave. A lot of people left. Like the last bear market, we had people that just left. That beat them up, and they gave in to their fear, uncertainty, doubt. They gave in to FUD, and they left. They took, their smaller nest egg with them. And if they would have just waited another year, things turned around. Everything's back up in the green. Now the right way to handle it though is to sort of understand what it is. That this is a bear market. That's what bear markets do. Things come down. I don't have to sell things. I can, I'll buy some stuff. I'll average down. If all of a sudden your favorite stock that was $100 is now like $75, woohoo! That's fantastic. You're getting a deal. Because when that stock a couple of years down the road is up at $125, the ones you bought while it was down at 75, they're up quite a bit. Well, they're up 50 opposed to the 25 that your regular shares that you bought before the bear market. So you just have to be prepared because a bear market will come. Now, luckily, if you're still watching this channel at that time, I'll certainly try to keep perspective and keep it real. as we move into that. Rory says there are always naysayers on cover call ETFs though. NAV erosion seems to be the negative argument. Yeah, and that was, I think, question number 2 on the stream. I was asking Adriano about NAV erosion. So yeah, NAV erosion, and I don't like that term because you have to look at it this way. There's a bit of a life cycle to a NAV. So a NAV stands for net asset value. It's the same thing as a market cap, but for ETFs. So, for example, an ETF that pays a big dividend, well, when they declare that dividend, all of that money gets accounted for and it gets pulled out of the net asset value. It gets pulled out of that. That's what happens. So that value does come down. Is that an erosion? No. It just means that money is being transferred from the company to you. Fine, that's fine. And plus, then the company, that erosion, the amount that's gone, it does equal itself back out. I mean, it slowly comes back up as the company is still making money. They're still doing their thing. So it's kind of that whole cycle. So each month, it'll go up and down, up and down, up and down. Now, when the market goes down, yeah, so too is, as the market caps of what an ETF is holding is going down, well, of course, the net asset value is going to go down too. So you have to sort of look where the money's going. And in most cases, what people are calling NAV erosion, it's the money's, it's not going away. It's, you can trace where that money's going. Either the underlying asset's going down. And that's fine. You'll get that back when the underlying asset comes back up. Or it's going into your pocket. If it's going into your pocket, you haven't lost anything. It's just you've transferred it from one place to another. So yeah, NAV erosion it makes it sound like it's just gone. And it's not. It's not gone. I always say, do the math, figure out where the money's going. And once you know where the money's going, if you're okay with where the money's going, then there's not even an issue. So yeah, a NAV erosion is just one of those things that a lot of the covered call ETF naysayers, as Rory's saying, that's kind of just one of their key words that they like to throw out there because it sounds like things are just disappearing, and they're not. All money has a trail. Always follow the dollars. Danielle says, thank you, all the wonderful YouTubers who are sharing this information with us. Candace, Adriano. Oh, yeah, absolutely. That's what we're here for. Jonathan says, I don't judge anyone by their underwear story. Thank you, Jonathan. I appreciate that. Bleak is in the house with a hey, hey. Martin says, loved the video with Adriano. Yeah, that one was a lot of fun. I thoroughly enjoyed that one. I enjoyed it so much I need some coffee. Oh, so good. A says, do mutual funds regularly balance the portfolio, or do they basically function like an index fund? It really boils down to the individual fund. And this answer is the same for both mutual funds and ETFs. Some will be balanced more regularly than others. Some are balanced quarterly, some are balanced annually, some are balanced biannually, so every second, semi-annually, I guess we'll call it. Yeah, and you'll find this when you go to their page. It should tell you how often they're balanced. But yeah, you will find a whole bunch of different ones. Let's see, I still have those mutual funds, but thinking about moving them eventually. They are in growth funds and doing good. Baby steps. Okay, well, if they're in growth and you don't need them, then yeah, leave them be, for sure. Martin says, trying to DCA into the cover call ETFs while the market is high, buying the growth on the red days. Okay, fair enough. Yeah, I mean, that's one of those things that you can do. But I mean, here's the thing with DCAing. If you're, a lot of times when you look at a market, because here right now, it feels like we're at the top. It feels like we're due for a market correction, but at the same time, that's the exact same thing people were saying back in January. It feels like we're at the top. It's time for a market correction. And guess what? A year ago, last August, people were saying, it feels like we're at the top. It's time for a correction. So what that tells us is not that people have been wrong 3 times. What that tells us is that we can't really predict when it's going to happen. So sometimes if you sort of sit back and wait, you can sometimes end up missing the best opportunities. And one of the best ways to get that is, and I'm going to just pull up a market here. Let's just pull, I'll just use VFV because this here is pretty much reflective of the overall market. All right. And here we go. I'm going to pull up. Let's go with the 5-year. So here's the market for the last 5 years. So VFV, it charts the S&P 500, but this shows you everything that's really happened. Like, for example, this little thing right here, this here was Liberation Day. The pandemic, well, actually, it's no longer on the 5-year. We'd have to go to the 10. If we go to the 10-year, here's the pandemic right here. So yeah, we'll stick with it. Doesn't, I'm going to go back to the 5-year just to give us more room. So for example, as we're heading up, so let's just come back here. So right about here, people were already saying, yeah, we're due to fall. So that was when it was at $126. And I've known people at 126 that were like, I'm just putting things into cash at this point. I'm holding and waiting. I'm waiting for the market to fall. And, they started to get excited because we had a little bit of a retracement. But next thing you know, we're going back up. So if we fell, let's just say that this was the fall right here. We'll use Liberation Day as the worst fall. It fell all the way down to 128. So this person who refused to buy at 126 right here, they probably got excited to buy at 128, thinking, I beat the market. Well, no, you didn't. You paid $2 more than you could have paid. And plus, if they had bought it here at 126, they also would have had all of the dividends that would have come back in as well. So you got to be a little bit careful. But yeah, in the case of buying the dip, fantastic, nothing wrong with that. But at the same time, one of the reasons that dollar cost averaging works is that it takes the guessing out of the market. So, if this person here had been dollar cost averaging, they may have bought here, 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 here. Maybe they even bought down in here. But when you look at it long term, and if you were to chart a line for where you bought, like if, let's say, for example, you're buying once a month, let's say you're putting $100 in once a month. At the end of that time, that line that you chart, it's going to be an absolutely fair value representation of that asset. And that's pretty good. That's pretty good. Because a lot of times people who are, like I said, this person here who thinks, I'm just going to wait, I'm only going to buy when it's low. Well, they've, all of a sudden if they've waited long enough, they're not getting, they're ending up paying above the line opposed to at the line. So dollar cost averaging will make you more money in most situations. In most situations, you're better off just a dollar cost average. All right. And let's see, Danielle says, I've always invested what I can after paying the bills and have a war chest. Ooh, I like war chests. War chests are awesome. Rory says, can you still go to zero when you lose your job too? Life is risky anyway. Just plan it right. Yeah, you can go to zero. Yeah. That's the thing. That's one of the reasons, guys. I talk about that emergency fund. Great thing to have in case your job does go to zero, for sure. D Divicus. The great thing about cover call ETFs is when the market tanks, you still get paid. Yes, that is the big thing. Absolutely. And it's nice. And sometimes when we have a prolonged red period, it feels pretty good in the morning to get those emails, saying you received dividends. So that's not a bad way to help pick yourself up when everything is red and people are like, oh, the market. Danielle, don't worry. I will not sell if the market goes down. I will nest more if I can. War chest is very important. Yeah, exactly. All right. Spike says, what do you think about the Global X USCL and QQCL not following the underlying year-to-date total returns? 9.91 versus 5.45, 8.84 versus 4.90. Really bad on my book. I'd have to dig a little bit deeper, Spike. Like I really don't have the data to give you a good definitive answer on what's going on there. But yeah, QQCL, like so QQCL, that there's the leveraged version of QQCC, and technically QQCC is the cover call version of I believe it's HXQ. I do like that fund. I do like the fund, but I have not yet really looked at them this year. I might have to look into that a bit more, Spike. Right now, I don't have a definitive answer. But yeah, USCL and QQCL. Yeah, it'll be very interesting. Now, I do know. I think it was EN. I think it was ENCC and ENCL. I believe they actually had a dividend cut. I have not had a chance to look at either the USCL or the QQCL. So I don't know, but I'll look into it. Zozo Trader in the house with a hi all. Divicus, the only way you can determine NAV erosion is if you can figure out from the ETF's annual report if the income they made is more than what they paid out. Not easy to figure out, by the way. Yeah, absolutely. But, I mean, that's the thing. You can still see where the money's going. That's kind of that important. To me, that's the important thing. If there was true NAV erosion, I'd be a little concerned. I would absolutely be concerned. Kevin Gaz in the house with a hey gang. All right. And let's see here. Nightbot says... Oh, I don't know what you did, Zozo, but you got Nightbot concerned. Brian says, good afternoon, everyone. Kevin Kiss, thanks for having Adriano on. All right. And Paul is using his, so yeah, channel members get a free super every month that they can use. And I like it. So just saying hi at the end of my lunch from work. So yeah. And guys, so one of the things I mentioned, as chats get going and get crazy, and we're getting more and more people all the time. So it's going to be harder for me to get to every question. So one of the ways, if you really want your question to be read, is with a super chat, or you do get this free one if you're a channel member. So in this case here, to me, these still count. So yeah, if we had, like, for example, if you used this on the Adriano chat, then your question would absolutely have gotten answered or posed. Well, posed, then answered. So yeah, just something to keep in mind. All right, from underwear, what do I have next? All right, so we have we got canola. That's what we have. So China just dropped a huge tariff hammer on Canadian canola, and yeah, it's big. So there's a new 75.8% preliminary duty coming onto Canadian canola, and it could very well freeze billions in exports and shake up the global oilseed market. Oh boy. As if we don't have enough to worry about with the United States. So this is, they're calling it a preliminary anti-dumping duty of 75.8%. It was effective as of last Thursday. The move is the latest escalation in a long-year trade dispute that began after Canada, after we slapped some tariffs on the Chinese electric vehicles. I would almost say, let's take those tariffs off those vehicles. Because a lot of, pretty much we did it for solidarity with the United States. And what the United States is doing to us right now, I don't think we need to be having any solidarity with them right now. Currently, so China is the world's largest importer of canola. And it gets most of that canola from, you guessed it, Canada. But at nearly 76%, this duty is essentially a market shutout. So China, apparently they said they had an investigation that they launched last September, and it found that Canadian farmers benefit from substantial subsidies and preferential policies. So the final decision on the final tariff, so this is just a preliminary, it's due in September, though China said it could extend that deadline by 6 months, and that final rate could change. It might even go higher. This is kind of a notable shift in tone. So just 2 months ago, the Chinese premier, Li Qiang, struck a more positive note during a call with Carney, saying there were no deep-rooted conflicts of interest between the two countries. But, oh boy, things change. So the impact on Canadian farmers could be huge. Exports to China were worth $5 billion in 2023. This canola it's mainly used over there for animal feed in their agriculture sector. And earlier tariffs on Canadian canola meal had already put pressure on the industry. So this is not a good one. This is a tough one. Now the move could open the door for Australia. They've been set to send test shipments to China after being shut out since 2020. So this could be good, I guess, for Australia. But even then, it would be very hard for them to replace the Canadian supply without a big drop in Chinese demand. So we'll have to see if this is more posturing from China. So while this action is significant, the National Farmers Union warns that potential tariffs from the U.S. could be even more damaging. So don't worry too much about China. But nonetheless, bad timing on this. I'm hoping this doesn't. I'm hoping this doesn't stick. I'm hoping it doesn't stick. Paul says, thank you for having Adriano on. Supply and command. I love that. Supply and command. That works. Oh, boy. Yeah, we're slowly getting caught up here on the news. That's fine. I don't care how long it takes us to get through the news. Ottawa. So Ottawa is looking to get themselves a little bit deeper into the housing game, and it wants the houses built fast, affordably, and with Canadian materials. So the government is moving forward with Build Canada Homes. It's a new housing initiative designed to fast-track affordable housing across the country while prioritizing Canadian-made materials and construction methods. Okay, nothing wrong with that. A consultation document released this week outlines some of their goals. So they want to speed up the conversion of federal lands into housing. They want to use Canadian materials, regional production hubs, and innovative construction methods like prefabricated and 3D printed homes. I actually saw a home being 3D printed once. Very cool. Very cool. They also want to focus on projects that deliver a significant number of affordable units, especially through co-ops, nonprofits, and Indigenous housing providers. The program is exploring a range of financial tools from below-market loans and equity investments to loan guarantees and contributions, and they're going to look to leverage private and philanthropic capital alongside public dollars. So we'll have to see how that all is going to look. Housing affordability, of course, was a central issue in the last federal election. With the CMHC estimating Canada needs to build between 430,000 and 480,000 new units over the next decade, and that's just to restore pre-pandemic affordability. Carney's platform, it pledged $6 billion to Build Canada Homes, plus $25 billion in financing for Canadian prefabricated home builders. The initiative could become either a standalone agency or perhaps even operate within the Housing Infrastructure and Committees Canada with a launch targeted for the fall. So we're definitely going to see more information on this coming down the line. Government officials are already in talks with modular and prefabricated housing companies to identify some of the ready-to-build projects. The goal is to avoid more layers of bureaucracy and to start building immediately with resources that are already available. So could be interesting. It could absolutely be interesting. What can I say? All right. Taking us to open text. So we got some changes going on over there at Open Text. There's going to be a big shakeup. at OpenText, and they're one of Canada's tech giants. So they have ousted their long-term CEO. Basically, they're eyeing some of the asset sales, and the company itself, they're facing some very tough questions about their growth. So this is a Waterloo-based software company, and their former current CEO, Mark Baranchia, he's been there for 13 years. He's being ousted all over sluggish organic growth, and that, of course, is impacting investor confidence. So investor frustration through the roof. He is being replaced on an interim basis by their executive VP, James McGorray. The leadership overhaul comes just weeks after the CFO abruptly left. So we got a lot of drama over at OpenText for sure. And there's been a lot of pressure from the shareholders to refocus the company. So OpenText says that it's now working with advisors to explore selling off some of their non-core assets so they can concentrate on its core information management for AI business. For years, OpenText grew mainly through acquisitions. Most recently, $5.8 billion, I believe it was. That was the purchase of Britain's Micro Focus back in 2023. But there's been a cost. Another cost of this is that they have not been focusing on the core business, and their existing business barely grew, often anywhere from 0 to 2% a year. Not a lot. So since that deal, organic growth has actually turned negative, dragging the stock valuation down to less than a quarter of its industry peers. So that's what's going on over there at OpenText. So investors, of course, have also pushed back on, Baranchia. He had a very huge pay and a lot of incentives, and his pay package was just crazy. So there's been a lot of pushback on that. So he's gone. They're looking to get new blood in there. They're looking to get a new direction and refocus on their organic growth. And hopefully they're hoping that the shakeup increases short-term execution risk. And a lot of analysts are believing it could be the catalyst that OpenText needs to unlock shareholder value. I hope so. I held them. Initially, I had them in the 0 to 100K challenge, but I wasn't liking what I was seeing. So I got out at a profit, and they have fallen since. So I am hoping to see them push things around. All right, we got one last story. But before we do, I'll just quickly wave at Zenial. Hello, welcome to the stream. All right, our final story of the day. Forget condos and office towers. The hottest real estate in Canada right now is senior housing. Demand is surging, supply is tight, and investors, well, they're just piling on in. So while much of Canada's real estate sector is still shaking off those post-pandemic troubles, senior housing is having a boom year. I mean it, big time. And this, of course, is thanks to, and I've talked about this a lot on the show, the boomers. The boomers are getting old. They're getting to that older part of old where they might need long care homes. And there's a couple of other little factors that work into this as well. So when the pandemic hit, they hit the long-term care homes. They hit them the hardest. There were thousands of deaths, lawsuits, and plummeting occupancy rates. So you would think that we wouldn't be in this situation, but a lot of homes were actually closed. So we've had closure of older facilities and slower new construction. So what has happened is that when all is said and done, it's actually kind of worked into a supply crunch. So right now, we have a supply crunch as the gray wave is hitting. And the gray wave are those Canadians 75 and older. And this here is surging. That age group is expected to grow, and it's expected to grow by 45% in the next decade, reaching a huge 5.3 million people. So cost to build new retirement homes have doubled, squeezing development while demand is climbing. So Demand's up, construction's down. As a result, occupancy rates are expected to hit pre-pandemic levels of 92% this year and could reach by 2026 95%. It is projected that 200,000 new senior housing suites will be needed in the next decade, yet we're looking at about 10,000 currently under construction. So this mismatch is helping to it's helping to drive performance. So far this year, the major players have seen some huge gains. So Sienna Senior Living up 19% this year. Chartwell Retirement Residence up 20%. Extendicare, I got them in the challenge. They're up 21%. All of them have so far been outpacing the broader REIT sector 6% gain. So they're kicking butt. They're kicking butt big time. So investment activity right now, it's really strong. So we've got deals ranging from Chartwell's $432 million purchase of 6 Ontario communities to Sienna, who purchased a $181 million acquisition for 4 Alberta care homes. Analysts are calling 2025 a record year for transactions. Now there are still some concerns. The pandemic did expose gaps in a for-profit care, with reports showing public facilities and higher staffing levels had better outcomes. The fees have been rising, so sometimes $6,000 a month for retirement homes. That could be a barrier if some seniors' home equity falls or pensions don't keep pace. Labor shortages are still an issue, and they will remain a challenge despite billions in government funding to hire more care staff. And I will tell you, I actually, when I'm doing my exercise, I listen to Spotify, and I've decided not to pay Spotify. I listen to their ad version because it's not that bad. But I constantly hear ads for basically for not long care homes, but for people getting into that public health sector. There's all kinds of funds out there to try to help encourage people to take that as a role. So still, with aging demographics, limited supply and high demand, many investors see senior housing REITs as one of the most resilient plays today in Canadian real estate. And we've seen that. We have seen that big time. All right. And I already mentioned coming up this week, we got in Canada, we got Tuesday, the CPI, Thursday, the PPI, and Friday, retail sales. Not a lot happening in Canada for earnings. US, we got Walmart, Home Depot, a couple of big ones. I keep expecting NVIDIA, but I looked them up. Because I keep saying, are they next week? They're actually not until the 27th of August. So that's the one I'm excited for, big time. But there we go, guys. That is the news. Let's get out of the news. Now it's all up to you guys. Let's see here. Al says, what do you think of Doman Building Materials? It has had a good run lately with a decent dividend. It should do well if home building picks up. Yes. Actually, Al, I did a recent video on infrastructure plays, and Doman Building Materials actually was in that list. Because, yeah, they definitely, I think they are poised to do really well with the build movement. So, yeah, I do like them. I think they're a good company. For sure. Brian says, I just finished doing some work on a 8-story seniors building in Oakville. I can only imagine the cost to live there. Yeah. Yep. That's let's get more of those those income ETFs in there to see if you can pay for your home. Let's do it. Let's see. HHL has come down, holds UNH, United Health, in the holdings. What do you think of HHL? Mount Fannis, thanks. The bot is after me. I don't have a lot of things that I let the bot, harass you guys for. So, we'll have to protect it. Come with me if you want to live. There we go. Isn't that the line from Terminator 2? So, what can I say? Yeah. Oh, we'll have to see. All right. Well, guys, we're getting up there. If you got your last minute questions. Let's get them on in here because I'd love to answer them. I'm gonna have some coffee while you guys are getting those questions in here for me. All right. I received an email from Wealthsimple with regards to the price to earnings ratio of VFV at an all-time high and what to do, but didn't really give any advice. Here's the thing. Price to earnings ratio on a ETF is really not something I would be too super concerned about. Like if we look, ironically, not ironically, but conveniently, we have, let me just pull this up. We actually have VFV right now on the screen. And you can sort of see here, their price to earnings, let's see here, 82.03. So yeah, it's high. But, once again, a price to earnings ratio, it's not really that relevant for an ETF. So I think people might see it and they might be concerned. Maybe Wealthsimple is reaching out in regards to that. But, you know, a price to earnings ratio, they're more of a fundamental that is, it's for individual stocks. Like one of the best ways to look at a price to earnings ratio is if you have, let's say if you're looking at the banks. They're all in the same sector. You can use that. You can use that as a comparison between the banks. But at the same time, even if you have a high, like with a regular stock, if you have a high PE ratio, there's reasons that it could be high. So if I'm looking at it fundamentally and I see it's high, I'm going to go and look at some of these reasons. Like, okay, well, what's going on? Did they just do a whole bunch of expanding? If they did a whole bunch of expanding, that'll inflate it. So, but with an ETF, I wouldn't worry about it. I really wouldn't worry about it. I'm actually kind of surprised Wealthsimple would even send an email out about it, unless people were just asking about it. Let's see, Roy, I heard some Wealthsimple account holders didn't get paid dividends last week. Oh, interesting. I had not heard anything of that. But if that happened, yeah, it's probably, I don't know. I would have heard, like, normally if it were a big problem, Wealthsimple would get ahead of something like that and would send out a communication for sure. So I don't know if that happened or not, but I have heard of people that for whatever reason one or two dividends didn't show up and they reached out to Wealthsimple. I was gonna say Healthsimple, Wealthsimple's customer service, and they're pretty good with it that way, but. As far as I know, I haven't heard anything about it. All right. DD Vegas says, are you familiar with HEQL leveraged version of HEQT, ZEQT, VEQT, XEQT? Thoughts on why a young investor would not hold this versus the non-leveraged version? So yeah, I love all equity. I think they're really good to give yourself that exposure. That international, because you're getting Canada, the United States, you're getting emerging markets. So yeah, all equity is huge, and they're definitely going to grow. Now, HEQL, so this here is a leveraged version. I haven't actually looked at HEQL. However, I can sort of infer where we're going with it. It really depends on what your goal is. So HEQL is going to create some income, but if you look at over the length of time of one of these funds, your total return is probably still going to be a little bit higher on, like, if you're looking at XEQT example versus HEQL, probably will be a little bit higher. However, if you reinvest everything from the HEQL, all of the dividends, it'll get you close. It'll get you close, but you might have segments of the year, like, for example, if we go into a flat market for a while, then HEQL will win in those markets. Or even even if we go into a bear market, yeah, you'll get a little bit of winning there. But I don't know how long it's been around, but I would actually love to do a comparison video between HEQL and maybe XEQT. Once we've got, I would say, ideally a year, if I had a year of history on it. So well, let's take a, actually, we'll take a look. I don't know how old, I don't know how long HEQL has been around. Yeah, it's one of the Global X ones. Here we go. Let's see here. I'm just going to pull up the 1 year. Oh, it has been around. Oh, it looks like it's been around for a year. Okay. Oh, this could be a really good video idea then. How long of, when did they start this? Okay, here's where they started it. Back in 2023. Okay, okay. All right. You've given me a video idea. Divicus. I want to, yeah, I'll do an analysis on these. I'll need to do it. That would be kind of cool. All right. Brian says, I never checked mine, Rory, but I did receive a lot of different dividends. Ah, I like that. I like that. Brian, I might get mine through TD. PLTR is at 950 PE ratio. Yeah, yeah. That does that. Yeah, Palantir has been exploding. And that will inflate your PE ratio. It will absolutely inflate it. So, you know, some people might say, look at Palantir and see something like that and say, oh my God, it's so overvalued. Well, is it? Is it overvalued? Look at what's going on in the world. Look at the context. And, you know, that it makes a lot of sense. It does make a lot of sense. Let's see, I'm just waiting for the last of my TD to move to Wealth Simple. Okay. HEQL is not an income fund. It is just 25% levered. Yeah. I mean, yeah, I don't want to call it an income fund per se. I was kind of using that loosely. But yeah, no, it's got the leverage. Now, I don't know if there's, like I said, I don't know if there's covered calls on it or if it's just leverage. Let's see here. Yeah, it doesn't really tell me here. I'd have to go to the website itself, but that would be one of those things I would want to look at. But yeah, no, I think that's an interesting idea. Now, and let's just put this out here. If HEQL does not use covered calls and it's just leverage, then it's probably done better. It's probably done better through the bull market because that leverage is going to definitely help. That leverage is going to definitely help. So, well, actually, now I need to know. Now I need to know if there's any. All right, let's do it. HEQL. All right, HEQL ETF. All right, let's find it here. HEQL. Come on, guys. Where are you at? HEQL. Let's see, Global X. All right. Well, let me just go in here, see if I can find them. Beta Pro. How did I get into Beta Pro? I don't know. Well, Beta Pro is part of Global X. So I'm just going to click on Global X here. I do not want, all right, no, I don't want to go into Beta. Beta Pro, by the way, guys, that's where you're going to find those inverse ETFs. The ones I did about that video, the dangerous video, that's where those are. All right, let's try this again here. Here, Global X. Oh, here it is. Bang, right here. Okay. Okay, this is what I want to see. By investing in globally diversified with target allocation, leverage ratio. Okay. All right, so there's no covered calls in here. This will definitely do better. This will do better for most of the year. Well, for most of the time when we're not in a bear market. Now, mind you, when we start to slip into a bear market, you're going to fall 25% faster. So this is going up 25% faster. So yeah, this is definitely the winner right now. So this is kind of, you know how I talk about strategy? This is where I would be inclined, like if I was wanting to play HEQL and maybe XEQL, I would be inclined to go into HEQL through the bull market And then once it's obvious that we're heading towards a bear market, I probably would start swapping over to XEQL, ride that down. Then I would, at the bottom of the bear market, or the bottom-ish, because it's hard to find the bottom, then, well, basically, I wouldn't even say that. What I would say, and this is kind of, let me show you something. All right. All right, Canva. We're going to head into Canva here. I actually rebooted my computer. I shut it down because we were talking about that the other day. So I have to pull everything up. I just want the whiteboard. All right, here we go. All right, perfect. Now I'm going to draw. There we go. I'll just do it all in red. It doesn't matter. Oops, that is not. All right, let's try this again. Hello, guys. Come on. Oh, there we go. All right. I'm going to lock that weight down a little bit. All right. So I normally will draw something like this to sort of give you the whole idea of a bear market. So here's a bull market, bear market, bull market, right? Fine. What does happen, though, is when you look at it a little closer, when we do fall, honestly, it looks more like something like that. So a lot of times, a lot of the big drop happens at the beginning of the bull market, at the bear market. So how I would handle something like this is, as this part is happening, that's where I would probably look to sort of switch from HEQL to like XEQL in this situation. And then I would ride, like once we get this sideways movement, normally that's going to go for a while. It might go down a little bit, like it might even go at a slight incline. But once we no longer have the steep slope, that's when I would switch back, because I definitely want to, in this case here, be in the leveraged version on that trip up, because that's where you're going to make a lot of money. So that's me, and I tend to be a little bit of a trader on things like that. So I'm kind of careful about that, but it's just kind of one of those things. Now, mind you, if this happens really fast, and I'll just give you an idea here. Let's go back to VFV for a moment. All right, so when you look right here, in this case here, in the last big bear market, you'll notice we had this big drop pretty fast, a little bit of a recovery, and then it was a little bit more. Now we did have a little bit, like that was kind of a bad drop as well. So it's kind of hard, like it's hard to find that point. Chances are I probably would have ended up by about here. I probably would have been looking at perhaps switching over as we were heading down. Now, we were lucky in this case because this here is the overall market, but tech actually started before this. So if we were to look at something like Microsoft, oh, that's the Canadian hedge. I don't want to look at the Canadian hedged. I want to look at the US Microsoft. Here we go. All right, now Microsoft, let's pull up the 5. Come on, guys. Come on up. There we go. 5 years. All right. Now, what you're going to see here is this was their drop. Now, this here, like their drop started early December. So by the end of December, they were already well on their way down. So what that illustrates is that technology last time, they went first. They led the way into the bear market. So there was almost about a month, roughly a month buffer between tech falling into a bear market and the rest of the market following. We don't always get a canary. So it's not like we can sort of say, let's just watch tech, and when they fall, we know what to do. It doesn't always work that way, but this last time it did. It was kind of a nice thing. Now, the interesting thing, too, is tech also kind of pulled us out of the bear market. Now, why is tech so important? Obviously, when you look at the big market caps of tech, the S&P 500, tech has a big pull on that. So it is kind of big, and it's getting bigger. So, when you look at things like Nvidia, way up there, and Microsoft and Apple, Amazon, AMD, they pretty much make up a huge chunk of that of the S&P 500. So part of the time this year, actually, most of the market was struggling a little bit at one point, but tech was still doing really good, and it propped up the market. And it can do that. It has that power. It can also pull it down, and I think it's going to get probably worse, but that's fine. That's fine. But yeah, the whole point is, and I guess, whoa, we really went off on a tangent here. The whole point is that I just like to be a little bit more strategic, but I think if you were not being strategic and you just continue to dollar cost through HEQL, when you look, and let's go back here to the board, when you look at this from a bigger perspective, if you're just dollar cost averaging through it, yeah, during this part here, you're losing 25% more, right? But when you look at the length of time, bull markets tend to be longer, a lot longer than bear markets. So over time, if you lost 25% about that much, but you gained 25% about that much, or even that much, depending on the length of the market, you're doing better. You're still doing okay. So dollar cost averaging is still fine in something like this. Where I would be concerned, and this is kind of why coming into this I wasn't aware whether or not they had covered calls. If they had covered calls, it changes the scenario a little bit, only because on that upside you would lose upside potential, and that does come into play. All right, guys. Whew. What can I say? Other than coffee is fantastic. All right, coming up on the channel this week, Tuesday or tomorrow, if you're a channel member. Channel members, by the way, they get to see everything one day early. We got more covered call ETFs that are coming out. So Purpose has 15 new ones that are coming. So we're going to take a quick look at those. Oh boy, it's almost like, it's funny, I did the one for Harvest. And after I finished it, and I found Purpose, and I'm like, no, I got to do these too. So yeah, that'll be coming out on Tuesday. We will be back live again on Wednesday for the market close. Can't wait. And as I said, on Thursday, channel members, you guys are going to get your channel member live stream coming up. Oh, I will release probably, I might do it tomorrow. I'll do it tomorrow morning. I take the channel member live stream from a year ago and I release it. I just turn it public. Every month you get to see the one from a year ago. So look at it this way. The channel member live streams, they get a 1-year preview before everybody else gets to see it. But I'll release that one tomorrow. So if you guys are bored and looking for something, you can check that one out. I don't even know what that one is. Let's find out. Let me tell you what it is. Give me a second here. Going into the content. Going into the live. Going into, okay. Trying to get to a year ago. All right. Here we go. I'm back to December, October. All right, July. No, it's August. August. Here we are. AI assisted investing. That's what we were talking about in that live stream a year ago. So yeah, that will actually, you know what? I'll just do it right now. Give me a second here. I'll turn it to public right this very minute. So if you want to watch it, you can watch it right after this if you want to. It doesn't matter. It's a year old. All right. and public. There we go. Publish. Boom. So yeah, the AI assisted one from a year ago is now public. So if you guys want to watch that or check it out or not, it is available. All of that fun stuff. All right, that's perfect. All right. All right, guys. Oh, wait a minute. There's a whole bunch of comments. My thing wasn't advancing. I'm like, what the heck? All right. Let me get caught up then. Let me get caught up. I was about to leave. Holy banana bread. All right, Bismarcky. I'm hoping HHIC starts trading this week. I am hoping to see that as well. I'm excited about HHIC. So I am very, very excited to see. HHIC will also have all the individual holdings starting as well. Yeah, they're all going to release at the same time. So yeah, all of those Harvest High income shares. I think they're going to release before the purpose ones, because the purpose ones we don't have a date yet, or even an idea. But anyway, that's going to be fun. JJ says, I have the leveraged QQQ in my RRSP, QQQL. It's awesome for the long term. Okay, fair enough. Let's see, 35-year horizon. Let's see. I missed all of this because my thing wasn't advancing. DD says HEQL 1 year price return is 20.70% versus the others at 18 or so. Yeah, that makes sense. That makes sense. As I said, without there being covered calls, it's going to win. Brian says, I think just taking bank and Utes will give a better yield than HHIC, looking at some of the stocks they picked for HHIC. We'll have to see. We'll have to see. I mean, I like bank a lot. And that might be the case, but we'll need to get some history. We'll need to get some history for sure. Let's see. The volume on HEQL only 122. It needs a lot more than that. Is it 122? Really? Let me take a look at that. Actually, we'll go over here to... That's funny. I got bird construction up. HEQL... There we go. Let's take a look and see what that volume is looking like. Okay, yeah, the volume, that was on the last day. The average volume is 4,301. It is small, but it's kind of one of those ones that I don't think a lot of people know about it. And that would be why. I think it's, and that's fine. Okay. Oh, and here was JJ giving me all the information I had to go look up. I can't believe it didn't. I can't believe my thing got stuck. Normally it won't stick. It'll give me a little thing saying more comments below. All right. Let's see. Brian says I have UTE. I have bank and UTES, which is awesome. Looking for more ETFs. Brian says last 6 months I have just been stacking Harvest TSLY. It's been around $7 a share and paying $25 per share. That's a 40% yield at those prices. And I just cannot see a better play right now. Yeah, I mean, I can understand that. Let's see. Wow, Elon's pissed me off too many times and I haven't looked at anything Tesla. All right, fair enough. There's no XEQT, there's no XEQL, just XEQT, ma'am. No misinformation, please. There we go. Brian says, Tesla been flat for that time too, so it's pretty much where it's leveled off at. But keep in mind, that's good for covered calls, right? And whether they're AI robot taxis and robos for your house coming, I can only see it going up, not down. And Larry does. Larry used to work at Tesla. All right, I think I finally caught up. I think I've legitimately caught up now. See, I'll look into it and throw some money. And then JJ. I object to JISY, 1 day advantage. We need 4 days at least. Thank you. There we go. Whew. All right, guys. Another great stream. You guys awesome. We will be back. As I said, we'll be back on Wednesday. Do the market close. Have some fun. Yeah, and also I'm going to start thinking about who will be our next victim for the this week conversations. So, if you guys have somebody you really want to see, feel free to throw it in the comments. No guarantees, but I prefer to bring people that you guys want to see opposed to just picking somebody at random type thing. I got my eyes on a couple of people, though. That's for sure. I don't know if I can get them, but I'm going to try. All right. Until next time, guys. Enjoy the rest of your day, and we will see you guys all again very, very soon. Until then, bye-bye.